Buddy, thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're going to do a little bit of an early midweek update on all our trades that we like to recap. That's for Tesla, Apple, AMD, Nvidia, Meta, and Amazon. So we always like to go over these stocks if you keep up with our videos, just because these stocks are really the most dominant stocks in the market, and they control a lot of the movement. However they move, usually the market follows. So let's go ahead and take a look at what's happening with these stocks so far this week. So on Friday, we did see a drawdown, and then to start the week, obviously, we saw another major drawdown from the market. SPY in specific broke below its 50-day moving average. So this was its Friday closing. You can see it came down below that level and defended it. However, when it retested it again on Monday, which was yesterday, you can see that it closed below it, significantly below it, and significantly below Friday's highs. On its attempt to come back higher today, you can see that it got rejected once and twice right around that 506.50 mark, which is why we're going to place a resistance at 506.50. So knowing that we got rejected at that level twice, we're going to need to place a resistance at that level, because now that is a new resistance that buyers are going to need to pay attention to in order for SPY to break out and continue its move up. Other than that, to the downside, this was the same support that we had on our Sunday analysis. So when we updated this video, we had a 503 support. Below that level, SPY is at risk of a gap fill. You can't see it because I have my extended hours on here, but if I put it on regular hours, you can see that there is an obvious gap that's not filled here. And so if we break below 503, then we can easily fill that gap down to 497. Now you can see that we tried to break that level, or sellers and bears tried to break that level this week, but so far buyers have been resilient and they have recovered us above that point. Now if we do break that level, this time around we have to break below 502.21, because that's the lowest point we came to and we defended. So we're going to move our bearish area to 502.21. Sellers are going to need to break below that level this time around to continue filling that gap down. There's a good chance that the next time we break below that level, we're not going to be able to recover above it. So the best possible outcome is that buyers continue consolidating here and eventually come back to retest 506.50 for a breakout. Now above 506.50, we have another resistance in place before we meet that 515.45, and that comes from this candle right here. And the reason why is because you can see that this is a major rejection candle. This is an entire hour of straight selling down, and you can see that it's accompanied with very strong volume. So when we look at this background volume bar, that blue bar, you can see it's one of the strongest volume candles that day, which means that the top of that candle is a major resistance area, which means that 510.60 is going to be the placement of our resistance above 506.50. So from 506.50, we need to clear it to get to 510.60, and then that's another challenge. If we can break above that point, then we can push towards 515.45, and above that level, that's when buyers take full control again, and we can easily squeeze to all-time highs. Now this week, we have two major earnings to worry about. First, it's going to be Netflix earnings. Let's take a look at what's happening with Netflix's stock. You can see that Netflix has been consolidating near its all-time highs. Its pullback has not been as severe as SPY's. You can see it's holding above the 50-day moving average. But this week's earnings will not only be a major test for Netflix, it'll be a major test for markets as a whole. We got to remember that Netflix is one of the first major corporations or technology corporations that's reporting earnings. We already saw banks report earnings earlier last week, and you can see the impact that JPM's earnings had across the banking sector. We can expect the same kind of impact from Netflix, whether it moves up or down on the technology sector. Now, Netflix's earnings expectations are extremely high. They are expected to report much higher than their previous quarter and much higher than the rest of the 4 quarters that preceded this quarter. So that means if Netflix can beat these expectations, and we can expect a large upside move from this stock. The reason why we say that is because these expectations are so high that they're already beyond estimates. They're already beyond expectations. So if Netflix can actually meet the expectations, that means they are doing very impressively, and they beat the 4 quarters that preceded this. Now, other than Netflix, we have another company that's reporting earnings, which is TSM. This is especially important because Taiwan Semiconductor last earnings was the biggest mover of semiconductor stock altogether. You can see that on its last report, it gapped up significantly and has been feeding off the report since, and that includes all of the other stocks and the semiconductors with it. This was around the same time right here that Semiconductor reported its earnings, and you can see that Nvidia went on this run, AMD went on this run. So many companies are related to each other that are related to each other in the semiconductor industry are going to be reacting to Taiwan Semiconductor's earnings this week. So that is another one to watch closely. Yes, markets are moving down based on geopolitical tensions, but ultimately those two catalysts from TSM and Netflix are going to be the biggest movers of markets, especially for tech stocks and semiconductor stocks. Now, outside of these stocks, let's take a look at what's happening at some of our favorite stocks, first and foremost being Tesla. So we can see that Tesla finally broke out of this long consolidation area that it was stuck in for about 2 weeks. We mentioned that it would make its big move this week on our Sunday analysis, and it followed through to the downside. And you can see that after Tesla got rejected on its 10 and 20-day moving averages on Monday, you can see a gap down. Here's how the follow through went. On the hourly time frame, you can see that Tesla broke below our 167.40 to start off the week, so that is no longer a support. And it also gapped below our 160 support. That was the final support. So as long as below 160, so we're going to replace the support at 160 with a resistance. As long as it's below this level, then sellers are in strong control and they're likely going to lead it lower. If it breaks back above 160, this is the next rejection point right here. So we would place a resistance at 167. Tesla sellers are going to need to leave Tesla below those levels in order for the stock to continue following through to the downside. This is now our new bearish zone or bearish territory to worry about. The next stock on our watches is going to be Apple. Apple, you can see, has had a very, very volatile last 4 days or 5 days. Apple has moved back to its 50-day moving average, gotten rejected at that level, and back below its 10 and 20-day moving averages within a matter of just 4 days. That just goes to show how choppy these market conditions are. If you're looking at Apple, here are the shorter term charts. Let's go ahead and see what they look like now. We haven't really updated these much since we updated them on Sunday. You can see that Apple is still below its 173.70 resistance. The main resistance it needs to break back above is going to be 178.70. That's in order for buyers to take full-on control. To the downside, our main support remains 167. Below that level, Apple is expected to free fall towards 160. AMD is up next. AMD is still flirting with its 100-day moving average, and you can see the extent that these moving averages can cause or can impact different stocks. You can see that after breaking the 50-day moving average, SPY continued selling off. So AMD is flirting with that 100-day moving average, an even more sturdy or more important moving average than the 50-day moving average, which already broke. If it breaks below that level, then it can sell off significantly. Here are our downside targets on AMD if it continues selling. So you can see that AMD already retested our 159.40 level earlier to start off this week. Buyers managed to defend that level, but they're still at risk of retesting if markets turn lower, and the downside price target below that level is going to be 154.30. The next stock on our watches is going to be Nvidia. Nvidia, like Apple, has had a pretty volatile 4 days, back above the 10 and 20-day moving average and then back below them. So there's a lot of inconsistency. But if we zoom in on Nvidia's 4-hour chart, you can see that it is still above this trend line that it managed to break last week. So Nvidia has been channeling down below this trend line. It managed to break it last week, came down to retest, and buyers have so far defended that level, which means that Nvidia could be on the verge of a full-on rally if buyers can break above 908.54. So watch for that breakout in order for Nvidia to move towards 975 to 1000. Last but not least, we're going to skip Meta and Amazon, but we're going to go over SMCI because that was a massive mover today. You can see that SMCI contracts moved as much as 41 what is that, 41,000, 412%, 442%. So that is a big move. Option traders were really excited about this one. The reason why it moved so much, let's go ahead and take a look. It doesn't, oh, it looks like it got an upgrade. It got an upgrade to a 1,500 price target, which is a massive price target. That is a 50% gain on the stock. You got to remember one thing about SMCI, and that is the fact that SMCI has a short float of 6%, and it only has 50 million shares available to the public market, which makes this the perfect combo for a short squeeze. Now, SMCI's short float is nowhere near where it was a couple months ago, but this is still a significant short float because that means 6% of the total shares available to the public market are currently being bet against. And those sellers or those people shorting those shares have to buy back their position in order to close that position. And so that means the stock is susceptible to a short squeeze, which is why its moves to the top side are so crazy. This is why we've seen the stock make this massive move, simply because this is a stock with a very low float. So low float means there's not that many shares available to the public market. And if there's not that many shares and there's high volume and the stock is already in demand and also has a short float of 6%, that means the stock can short squeeze and it can rapidly move up, which explains why the stock can rapidly move up so much. So what does that mean for the stock? Where is it going from here? On the daily chart, you can see that SMCI's move today moved it back above the 10, 20, and 50-day moving averages, which means that every day, at the start and at the end of every day, you need to be looking to see where did that daily candle open and close in relation to these moving averages. As long as buyers can defend those levels can act as a support, as they did here. You can see when they carried it for a multi-month rally that carried the stock significantly, almost four timesing the stock. And so if buyers can once again defend those moving averages, then they can potentially move the stock higher and continue moving it as long as they're defending those levels. Now on the shorter term time frame, you can see that this is obviously a very vertical move, which means that the stock may need to consolidate. On that consolidation, buyers are going to want to see the stock stay above that 945 level. This is the breakout point that it had. You can see that the stock got rejected significantly at that level. So that means that now that it's back above it, buyers don't want to see it break back below. So as long as buyers are defending 945, obviously we want to see them defend a higher level than that. But if they come down to 945, that's still okay. They still have a chance to bounce. Then there's a good chance that the stock will continue, with the next price target being right around 1,060, and the price target after that is going to be right around 1,100. And so that's all we have for you guys. Thank you so much for checking in. Don't forget to subscribe and like, and check back in for updated price targets and levels.